Well, I'm a big advocate for financial education. So in the 1970s, when I got out of the Marine Corps, my rich dad had me take two things. I had to learn how to sell because sales equals income. And then I had to learn how to invest in real estate because real estate is debt. So most people say, live debt free. I had to learn to use debt as money. And as you guys know, in 71, Nixon took the dollar off the gold standard and the US dollar became debt. So I do almost everything opposite of what the pundits say. I'm not debt free. I use debt as money to acquire real estate, and that minimizes my taxes. That's what I do.
Well, what was lesson number one in Rich Dad, Poor Dad? Rich don't work for money.
Right.
The reason is money is toxic. After 1971, people who work for money are getting poorer because the way your wealth is sucked out of you by the Fed, by the US Treasury, and by our government and our school system is the people that work for money get poorer. The people that save money get poorer. And the people that invest in stocks, bonds, mutual funds, and ETFs, they're temporarily rich. But in a flash, they can lose it all. The higher your financial IQ, you don't need money. So if you need money, you're not using your brain or something, because it doesn't take money to make money. And that's one of the biggest lies they tell you. So since 1973, I've not had to, I use debt. I use my own money. I just borrow money to get rich. And this guy's like Dave Ramsey, a good friend of mine, and he says, live debt free. Well, that's good advice for his audience. That's why I was asking, who's your demographics? Are they smart, they're stupid, they're rich, they're poor? Are they educated, not educated? But so many people want to get rich, but they have horrible teachers. And then they work for fake money. The US dollar is fake. They print trillions of it every month or day. And then you buy these fake assets. I don't touch that stuff. But the average person should. So that's why demographics and a person's desire to be rich is probably more important than their education. Well, if you're going to be educated, a person has to know there's between credit and debt. And that's why I'm mentioning the demographics, because the average person is not smart enough to handle that. All money today is credit. It doesn't exist. Credit is very simply the power to spend. That's all it is. So when you have a credit card, there's no money in that thing. They've just given you the power to spend. And the moment you spend it, you create debt. And then a debt is this contractual agreement that you'll pay it back. So when the markets crashed, my partners and I borrowed $300 million and we bought more property. Wow. And so 10 years later, we're now almost 600 million in debt. We just passed $500 million.
Right.
But we get very rich off of debt.
Right.
But that takes financial education. That's why I created the cash flow board game. Yeah. Cash flow is the only board game that encourages you to use debt. If you don't know how to use debt, then follow Dave Ramsey's rule of live debt free. Yeah. So when I have a rental property here, it puts money in my pocket. So if I live in the house, it's a liability, because even if I have no debt on it, I still have taxes, depreciation, repairs, and upkeep, insurance, and all this. When I rent a property, I've done a good job buying it and structuring it. Every month it sends me money. So I started off when I was 25. I had a little one-bedroom condo, and it put $25 in my pocket. It was a start. So this was good debt. You see, the debt also went out and paid, but it also put $25 in my pocket. So net, I was making money from my little house. So today, my wife and I own 6,500 of them. And every month, 6,500 houses put money in my pocket. My people who live in them love me and all this because they have a place to live. But all of this comes from debt. So they're 100% finance here. It's all debt. So this is good debt. And what makes it good debt are the two most important words, cash flow. Does that make sense to you? So the definition of liability, does it take money from your pocket? And for an asset, does it put money in your pocket?
stocks are liquid, so you can get in and out. But the moment you go into real estate or you start a business, you're illiquid. And so the more illiquid the assets you're investing in, the smarter you've got to be.